Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and Happy New Year. This is a one-year daily candle chart of the IWM, which is the Russell 2000 ETF. And I am sure you are happy that 2020 is now behind us. I'm looking forward to 2021 as being the year of opportunity for us traders, particularly the option traders, because I also can see volatility starting to increase over time. And of course, for the option traders and even the swing traders, this gives us more opportunities to trade, especially if you're following the technical signals. Now, again, this is the Russell 2000 ETF, IWM. And last week, what I did is I established a support level, basically identifying this as our risk management point. I said each and every week, we would trail our stops up, especially if you're long the small caps in the IWM. So while this is the ETF, you would do the same exact thing for individual stocks. So what I'm going to do right now is erase this line, basically show you where to place your stop. We're using the 20-period moving average as our guide because once the 20-period moving average drops, there's a good chance that prices will follow and go to the lower levels. That's usually what happens with the 20-period moving average. So if you're managing risk, what you want to do is keep your stops just below that support level. So you're trailing that stop up with the price of the stock. Now with the diamonds, this is the Dow Jones Industrial Average ETF. Did the same thing. I said, here is our support level. And I said, if the market drops below that, you would get out, putting your stop right below that support level. So what we're going to do is move that right up. Again, trailing the stop up to the 20-period moving average. And then if it breaks out below that moving average, you would simply get out. So there's where the stop would be placed. If you are long any Dow stocks, look for that blue line. Most of your brokers out there are going to allow a trading platform that gives you that 20-period moving average automatically. And so it makes it easy for you to do that. Now keep in mind, this is going to be a key support level because back here we saw a gap up in the market. And 80% of the time gaps fill, and then after they fill, prices usually bounce from that level. And so that is a good confirmation of a support level. So again, keep your stop below there. Looking at the Qs, this is basically the NASDAQ market. QQQ, you can see, same thing. I established this as the trend line, and you can see we're still holding that. Let me just extend that out now. That trend line is still holding. It's a short-term upward leg. Now, with the Qs, you could get a little bit more aggressive with your stop and put it right below that trend line, but I'm going to be a little bit more conservative and move that support level up to that 20-period moving average. Again, showing you how to keep your stop below that, not on support, not above support, but below support. You can see back here how the 20-period moving average acted as support. The market pulled back to that, bounced, pulled back again, bounced. So that becomes a very reliable level of support. And again, if it drops below that, simply get out, move to cash, and wait for another support level to be hit. And then you get back in the lower level. It's really pretty easy, actually. So let's take a look at the VIX. Last week I said that the VIX would pull back Monday and Tuesday. That's exactly what happened. You can see right here, Monday, Tuesday, we went a little bit lower, and then we bounced, closed pretty much at my target here. We hit the target right there on this bullish engulfing green candle, and we have more or less mixed signals. I'm going to erase this for you because the mixed signals that I'm talking about is we have very close to what looks like a hammer pattern. We have the stochastics are moving up, but the CCI is going down. So the support level for the VIX is now a little bit higher from back here, but I'm still going to say that the VIX will move higher, and not getting crazy with my forecast on that. I just think we're going to go up higher, and the VIX probably around 24, 25. We have 2 more days left in what's known as the Santa Claus rally or year-end rally. It doesn't look like that's going to follow through and wind up with higher prices consistently, but who knows? It could happen. And then, of course, on Wednesday, big news will come out on January 6th, and we'll find out if this election is finally over and done and put into the history books. But we'll see. A lot going on in the world right now, and I think that the volatility index is going to give us some key signals, leading indicator as it is. It'll give us some key signals as to shifts in the market. Now, if we look at the SPY, which for the most part is inversely related to the VIX, you can see right here, I said we would rally and then start to pull back. Well, if I think the VIX is going to rally, well, guess what? That means the S&P could drop. And so while I still think it could get to these levels, I'm going to show you, just like I did with the other markets, using this 20-period moving average right here as a guide, because here too we have a gap that has not yet filled. So if we even go up a little bit and pull back, this is going to be your support level. If it breaks out below that support level, that's why you want to protect yourself right there with a stop below support. Now, please, if you are following us on YouTube, please click the like button right there. That'll do a great favor. It'll help the algorithm, and it'll get out to more people that are looking for content like this. Of course, each and every week we ask that you share this also with people that you care about and who are interested in trading the markets. And above all, please subscribe. If you subscribe, there's a little notification button right next to that. You can click on it, and once I post this, you'll get notification that it's posted. So again, Happy New Year. Enjoy the rest of the weekend, and we will talk to you soon. So long.